Good evening or good morning for some of you gentlemen. My name is Igor, and today we've got Dennis O'Connell from ERC3643 Association, and we've got Wayne Tan, a co-founder of General Counsel of Open Eden. Gentlemen, welcome. It's a pleasure to have you here.
Yeah,
Oh,
thanks for
thanks
having
for
us,
having us.
Igor.
Cool. So, I think we should start off probably with some little bit of intro, and then we'll jump in. Our agenda is pretty diverse. Nothing concrete. All we're gathering here to talk about some tokenization. Talk about how the industry is rapidly growing and how we're gonna take a big part of it and help it form. Right. So, my name is Igor. I'm chief of growth for Hacken. It's one of the first things I've done this year so far in terms of speaking for hacking at something like this. So I'm very excited. So I'm just overjoyed with having an opportunity to have interview with such excellent people. Not interview, but have such speakers. And so. Um, I would like to pass on, I guess, to Dennis to do a brief intro. Please tell us what it is that you do. Tell us the importance of the ERC 3643 and how is it that you're going to change this world and make it a better place?
Wow. Well, Igor and Wayne, it's absolute pleasure to join you guys today. This is super exciting and really looking forward to just what's going to be an awesome conversation. So, brief background for me is always a loaded question, but I'll hit some of the highlights. So, I started my career as mechanical and aerospace engineer. I worked at NASA for 2 years. I then left and did almost a decade career in high frequency, low latency derivatives trading in Chicago. I then moved over to capital markets at Bank of America Merrill Lynch, and then collateral at Bank of New York Mellon. And then today, I run my own global asset management firm with my partners called PSC Digital, which is based in London, Abu Dhabi, Hong Kong. And I run the largest RWA standard in the world, the nonprofit ERC3643 Association, and a board advisor to many prominent projects and financial institutions. So happy to be here. 3643, yeah, changing the world. It's built on community. We're about 3 years old now. Some of the fun statistics is we're regulated in 23 jurisdictions around the world. We won an innovation exemption from the SEC from Chairman Atkins. We won this past week a permission from WPG from the German regulator. And we are launching a DAO, which I'm excited to tell everyone about. So that's what I'm up to. Pleasure to be here. Thank you so much, Igor.
Wow, well, thank you. And now, Wayne, give us your rundown. What do you do, and how are you engaged in this wonderful industry?
Well, that's a kind of a tough act to follow there, Dennis. So I'll try. So I'm Wayne, General Counsel and co-founder of Open Eden. I started my career as a practicing lawyer, spent over a decade advising on regulatory IP technology, and in the last, well, before I left practice, pretty much the rise of crypto, blockchain, Web3. Before I finally moved in-house, headed the legal function at Signum Bank for APAC. I think the first licensed Swiss digital bank. Before kind of meeting Jeremy, and then Open Eden is where I'm at right now. So how am I involved? I mean, Open Eden is a real-world asset tokenization platform. We want to bridge traditional finance and DeFi. I mean, right now everyone's in tokenization, and I hope that we play the part of ushering that kind of forward as well. Now we see more institutions coming in. We have a very institutional kind of history and backbone. The founders of the company have all worked in traditional and been exposed to Web3. So we kind of saw the core problems that that we see in the industry that tokenization can solve. Our first product was essentially automating a lot of the very manual processes you saw in like fund asset management onto a blockchain platform. Giving control back to the investors. You don't have to go to your RM, then they have to go to their fund admin. We automated all of that. So that's what we've been involved in so far. And we we started with US Treasury bills, I guess, because they are one of the most well understood, liquid, and reliable assets out there. As the first product that we tokenized and brought on chain, we manage that ourselves out of a regulated entity. We're familiar with operating regulated entities, and now, we've partnered strategically with BNY Mellon as well, who's taken over that, and a lot more products on the pipeline with them as well. So I mean, that's us in a nutshell. And let's get started with the interesting questions.
Wow, you guys definitely have your hands full in terms of being busy and doing a lot of different things. Also, I guess fellow from traditional finances originally, tried to get out of this whole routine of the suit and tie, and I said never again. I'm going to crypto, DGen life, and now I'm back to wearing suits and ties, and so full circle of life, right? So. But I'm glad where I am, and I'm happy. Sure, as you guys are as well. Listen, my first thing, let's ideally out of this conversation here, I really would like for us to define what is institutional grade tokenization is. And second is, I guess, where the liquidity is going to come from, right? And then the final point is what would be the three, I guess this kind of like crosses over into a first part of the conversation, a first part of the question. What would be the three things that you would like for our listeners to take away after this in terms of getting a deeper understanding of tokenization in whatever capacity where we are and where we're going? I guess Wayne, you take that one.
That's quite a lot to unpack in that question. So let's start with, I guess, institutional grade. What does that mean, right? It's a term you hear everywhere all the time nowadays. Institutional grade, battle tested, so on and so forth. I think in a nutshell, what people kind of associate with that is, replicating whatever legal, operational, compliance, risk standards that govern traditional financial markets and institutions, and kind of bringing them on chain, right? But what does that actually mean, right? I mean, smart contracts, they imply they're contracts, things happen and then other things happen as well. It's also about, how do you enforce the rights? How do you enforce certain standards? Whether you're regulated, you're not regulated, whether someone's holding you to account, right? If you're saying that you're compliant, you're saying you're following standards, you're institutional grade, who's holding you to account? And also whether the custody setup you have, whether that will satisfy, I guess, institutional standards, right? Because every regulator in the world has, put very strict requirements, or some stricter than most, on how you hold clients' assets, how you hold your own assets, how you ensure that you continue to have operating capital, and how it's separated from what you actually do. So, I mean, institutional grade really encompasses this whole kind of area, and it's not just about saying you are and having maybe one of the big consulting firms or audit firms give you a set of standard templates. Say, yeah, we have our policies in place. It's also about recognition by other industry or institutional partners who have to deal with you, right? We talk about disintermediation, but participation in financial markets and systems, you need to work with other institutions as well, and they need to be satisfied that you actually do what you say you do. So you can map it. You have to map out all your various controls, policies to what they understand, because you're talking about on-chain compliance, which differs slightly from traditional compliance. So it's about mapping it to them, being able to explain it and proving it, whether by third-party ratings, certifications, etc. And I think the ultimate test of institutional grade is just whether or not other institutions want to work with you, right? I mean, one of the key things that from my time in practice, my time at Signum Bank, and then at Open Eden, is really that can stakeholders of very traditional, reputable financial institutions sell you as a Web3 or a blockchain platform to their stakeholders who more often than not don't really know much about the space. They rely on board decks that don't really kind of go into a lot of detail. So whether they're comfortable, they recognize elements of what they're familiar with in what you do, right? And whether you're able to kind of really package it very nicely and tick all those boxes, show them the certifications, which are hard to get, right? But you go through the process, you get it anyway. So I think that's kind of where I sit on what is institutional grade, right? On that question, I'm going to pause here and see if Dennis has any kind of input on that.
Well, really well said. And yeah, Open Eden's doing really, really cool stuff, which is really, really great to see. Yeah, I also agree. A lot of great questions to break down. So I'll take the first one with like institutional grade tokenization. And I like to say I learned what institutional grade tokenization was by being repeatedly punched in the face. Back in 2017, when it was R3, and I was at Bank of America Merrill Lynch. There was an innovation fair where we did a intercompany stock loan use case, and we all naively, myself and 12, intrepid Java developers thought, oh, this is great. We solved the problem, only to realize that the front office and the traders hated it. They hated on every premise of it. And I began to realize, like, okay, this is not going to be as easy or fun as we hope. I think when people talk about institutional tokenization, generally they're pointing to a few things. They're usually pointing to the size of the offering. They're pointing to the participants usually being regulated or qualified, but not always, but usually meaningfully large institutions or pension funds or sovereigns. But what comes really at the meaning, what's hidden behind that is the actual holding of the asset. So one of the things that has long been, up until a few years ago, been a contentious point is, what does a token mean inherently? This sort of like chassis, right? And for everyone in crypto, it's obvious. A token in itself doesn't have meaning. We assign the meaning to the token. So an institution is a form of assigning meaning to tokenization. So does that mean tokenized stocks are institutional? It depends. Does that mean private credit's institutional? It depends. Generally, what people mean when they talk about institutional grade tokenization, at least in my sphere, is the actual holding of the actual assets, the actual share registry of what we call. It's not an IOU, it's not a claim, it's not a derivative or a contract. It is the actual holding, as if you were holding a stock certificate, either public or private. And that carries a lot of caveats that, gets people, really eyes open of like, hey, what does this actually mean for, crazy big things like the financial infrastructure? What does it mean for the central banks? So when you start getting to real assets on chain, the stakes get much higher because the velocity, the liquidity, the mobility of all these assets get much more serious. It also gets much more exciting. The way we break it down at 3643 for institutional is it starts with identity. Identity is a fundamental concern for regulators around the world. Is the actor off-chain the same actor on-chain? Then the next one is registry. Does that actor have the roles or authorizations or permissions to perform that action? Are they the administrator, the dealer, the issuer, the investor, right? What does it actually mean in their role? And then, of course, the compliance. What from the asset can be done or not be done, right? And that's so specific. And what I tell people is, they ask me like, well, tell me about tokenization. I go, tell me your jurisdiction, tell me your asset class, and tell me your life cycle, and I'll give you an answer. And that's part of the complexity of this. Something that's true for a structured credit is not true for a commodity. It's not true for a sovereign bond like a treasury, right? So that compliance is very challenging for blockchain. A lot of data, and part of our partnership with really great partners like Chainlink and their automated compliance engine really help us do dynamic rules, real-time rules with 3643, which has opened up a really exciting new possibilities. And then finally, the big one and controversial one is control. So 3643 is not here to replace ERC20, 721, 1155, and the many other amazing open standards that we're a part of. And I'll talk about open standards a little bit. We have a specific role to play, which is permissioned, what we call permission tokens. And permission tokens cut both ways. In some ways, we have over 120 different controls around this ledger, which for the regulators that need to have this kind of control location is great. We could mint, pause, we could encumber, we could do clawback, we could do recovery, fine. But if you're DeFi maximalist, things like clawback will disturb you. So we have our place in certain contexts, and we've become very proficient in building this body of knowledge and getting regulators around the world, from Hong Kong, HKMA, to Mass, to Abu Dhabi, to Germany, London, Latin America, and now the United States, comfortable with this level of permission and control. But we always say we're part of a wider ecosystem. And so these 4 tenets, identity, registry, compliance, and control, sort of create the framework, the foundation for this institutional grade tokenization to prevent this runaway train. But of course, it also leads to massive liquidity challenges. Now, I'll pause there.
I could listen to you for hours, man, both of you. It's, when it comes to, what's going on in regulation, just to start with saying that, and I've said this at the Hill when we were there earlier this year, just the fact that we're having these conversations of regulation and compliance, that's amazing. And you guys are doing such a great contribution towards formation of such. So I guess this next question would probably be more for Dennis. So how does ERC3643 enforce compliance at the token layer? And what are the biggest wins and common misuses for the production or in the production?
Well, it's a great question. And before I answer, I want to touch on what you talked about with the situation in the regulation globally, because I think that's an important part of this conversation. As everyone has seen, the United States posture has done, I won't even say a 180, but a 720. ERC3643 was approached or had the opportunity to present to FinHub last year for the SEC. And at the time, we had about 80 or so members, and there was not a single member that wanted to participate. Myself and Daniel Cohier of Apex did it. I had to pass through 18 different SEC lawyers. By the way, helps for me, working at back in New York, Mellon, and Merrill Lynch. I get to know a lot of SEC lawyers, which is not always a good thing because they make you realize how stupid what you're about to do is. But we cut a deck. We presented to the FinHub. The questions were great, engagement was great, but ultimately went nowhere. And really, we found a lot of acceleration, kind of where you would expect and where you wouldn't expect. So where you expect, offshores, Middle East, really great. But where you wouldn't expect is actually Europe. So a lot of people don't know is we not only engage with the EU, but we engage with several countries directly, like France, Spain, Germany, Luxembourg, where we're founded, and even Poland and the UK. And so we kind of had this strategy of like going to these different individual regulators and getting really great feedback on them. And then, of course, expanding to Asia with the amazing moves in the Hong Kong Monetary Authority. And we kind of written off US totally. Now, with the change of guard in the US, it's been incredible. I joke from people, it's like suddenly no one wanted to go, and now it's a stampede to get in. And the SEC has some really great resources. You can see on their website all the different projects meeting with them, and it's really a new day. And Michael Seelig and the Crypto Task Force have fundamentally changed the game for the better for the industry, and are making important strides. And they created the opportunity for ERC3643, along with some really great members such as Chainlink, the Linux Foundation, Decentralized Trust, Ethereum Enterprise Alliance, Etherealize, and of course Apex Tokeny, to come and present to the SEC Crypto Task Force. And our presentation was really rational, grounded on, hey, we think we meet regulations. Regulations are perfect. We have this new technology. Help us bridge the gap. And I'm really excited to say that the Crypto Task Force has been super engaging. They've been net positive for the industry, and we're really seeing the benefits writ large for that. And so things like the Genius Act, market structure bill, but also the joint task force between the CFTC, the joint sandbox with the FCA and the SEC, the Treasury Department, even things like NIST, and the exciting things that are going on at OCC. And you saw this past week at the Fed. this is a whole of government approach, which we've never had before. And it has the opportunity for people like myself and Wayne, who've had extensive backgrounds in TradFi, to come in and say, hey, listen, you know, I worked at a serious institution. I know how regulations work. This is new technology, and we want to work with you to, you know, meet those requirements. And where we need a rule change or a policy change, you know, let us work with you to do so. And so that has been a really wonderful thing. ERC3643 has been leading the way on token standards, but we believe in open standards. We believe that standards that are fundamentally sourced from blockchains of all types should be embraced by regulators, should be scrutinized, and can ultimately become full-blown financial standards, which is extremely exciting. And I know the SWIFT team on the payment side have been doing some really exciting things like that. I know Spain, ISO has been doing some really exciting things. And I know there's a lot of really great things happening in the US and Latin America, specifically on taking 3643 to a full financial standard. So I thought it was a great point, Igor, that you brought up, and I just want to touch on some of those points you made.
Thank you. We got to give some of our other participants, well, particularly Wayne, a moment to speak as well. So, question in terms of institutional drivers, right? So, the big narrative is like the institutional grades everything. Like, you know, now we are no longer crypto, we are digital assets. So we are maturing, and like a, you know, like my simple story where I used to run away from having to wear a suit back to like going and getting more suits, because now I have to, you know, look, you know, be part of the new norm, the institutional norm, right? How are we going to drive institutional in terms of like adoption just outside of that? Is that what becoming a new thing where when we're thinking of crypto, it's like the new payment solution or new instruments that are the big players are using it? Are we completely stepping away from the original degen life, or are we gonna completely, you know, do a 180 on this? I doubt we're gonna, you know, I'm afraid we might even do a 360 on this one. You know, try this, doesn't work out, let's go back to what we really like. I don't believe we were able to, but what do you guys think? Wayne, what's your thought on this?
Well, I mean, I link it back to what I think Dennis was talking about just now. Like, you know, there's really a big rush in the US for people to kind of get in on the ground floor, you know, participate in the building, you know, putting into place all the infrastructure, the roads, you know, so that, you know, people who want to build the cars have someone to drive them, right? You know, so, you know, having the standards or the service providers, you know, Chainlink, all these people coming in and advising and chipping in. I think that is one of the primary, I guess, institutional drivers, because, you know, like if I'm a bank, right, I'm not going to be the one building all these things. I want to see what's out there. You know, how can I plug into it? You know, banks are never the first movers, you know, so they need to see that something is happening and then they want to jump in. I mean, and you're seeing that every day. Every day in the past few months, you know, institutions are stepping in. They're either acquiring or, you know, they're launching their own initiatives. MasterCard, Visa, PayPal, Swift as well announced, I think, last month they're going to be incorporating DLT. So, you know, it's, I guess where we're seeing is that people are building, right? And when people build, obviously FIs, institutional players can come in, but then it makes it also easier for other people, right? You know, maybe the fintech, the startup that you know was very worried about, you know, if I do this, am I going to go to jail? Do I set up in the Caymans or the BVI? Now they say, hey, look, you know, these standards are accepted. You know, everyone's using this. You know, these service providers are there. You know, it's more incentive for them to kind of try it out. You know, so they, like the degens, you know, I mean, credit to them. When nothing was built, they built it themselves, right? And then they ran it, and then, you know, they built the entire ecosystem, and they showed people that, you know, the technology is useful to automate, to simplify, to you know, disintermediate so many things. So I guess we'll kind of hit some middle ground where there will be the regulated space, the institutional space, right? Like almost like you have your exchanges, your traditional securities exchanges. Now crypto exchanges are all regulated, and then you will have like the private markets. You will have people who either based in the US, partially in the US, or different jurisdictions, and they try to, and there will always be regulatory arbitrage, I believe, when it comes to this. I think humans are by nature very creative. So if something doesn't suit them, they'll create something that does. But one thing I do see that everyone is aligning on is, I think, the need for AML KYC, right? I mean, that's the primary pain point for everything that we do in this space, right? So I think that will be aligned at some point. On-chain identity will be the reality in the future. When, I don't know, because there's going to be a lot of resistance to that. But you know that you will play in the regulated space. You will play in the either semi-regulated or less heavily regulated, like maybe for certain carve-outs. So that's where I kind of see we won't go purely institutional because of the nature of crypto. People like what they do. I mean, when I started getting into it, I was this is so easy. Well, I mean, not easy from a technical standpoint, but it's fast, right? And it's zero friction once you kind of get a hang of how to do stuff. So people like that, and there's always going to be people who will cater to that. That's what I see happening.
I agree with you. I mean, I'm personally, as wearing a security auditor, somebody that wants to protect the industry, somebody that has the background in finances. I myself did Merrill Lynch, Wells Fargo, and others. So yeah, I definitely understand you guys. But I am so pro regulation, because if we understand that it's coming, and we know that we are, and I've been saying that, they're gonna come. We're too appealing for them, right? So, and they did. If they're gonna come and we know it, let's welcome them, right? So allowing them to, I say them, regulators, come create the framework, talk to us about what they want to see, how they want to regulate it. We become complicit, and we build work, and like you said before, like we're afraid. Where do I go? Do I build here? Do I move to Switzerland? And I think a big portion of that has led the regulators in US thinking that the next big Googles and Amazons and so on are not going to be coming out of the US, and they might potentially go elsewhere because the regulation has clarity and stability, and they're not going to fear of what might happen. Now, Dennis, where do you think the biggest ROI for RWAs is going to come from? Like, what do you think that institutions are? We're all talking about stables, the RWAs, but where do you think, in your opinion, I mean, where do you think the institutions are going to go with this? Where are they steering their boat?
I think my answer is going to surprise many people. I think it's going to be DeFi. And I don't say that flippantly or sarcastically. I'm actually quite serious. As you guys were talking, I was thinking to myself, it's rare to see a fintech these days. They're not even on a blockchain. And we've suffered punitive regulation for so long, but now we have this positive regulation. And you've asked me, like, hey, where's liquidity coming from, or whatever. So if you look at our industry is actually very polarized. We don't really talk about it too much, but everyone kind of acknowledges it. At 3643, I see it directly. Of our 140 members, we have a good contingent of DeFi guys who are really passionate about it. And on the institutional side, we have quiet conversations about the uncomfortable truth. The first years of tokenization, just getting the asset on chain was thought to be enough. In fact, if you look at the first blockchains, just the token, like a Stellar or R3, just having it on chain and having it transact as a record of transaction was enough. And what we found is that sucks. If you want to find a issuer, it's actually easier to find an issuer for an RWA than it is to find a institutional regulated wallet to purchase it and buy it. And that's by design, because the incentive and utility are not there. An uncomfortable truth of RWAs is you still could do more with that asset off-chain traditionally than you can. What am I talking about? Well, collateralization and mobility. Very simply, I want liquidity, but I don't want to part ways with my asset, or I want to get a yield. One of the main challenges that we've had with ERC3643 is because of its permission context, we always historically relied on primary market participation. That, in other words, investors who believe in the face value of the offering, let's say treasury, gold-backed commodity, private asset, whatever. But the secondary market of all these investors coming really hasn't come. And the reason is it's so thin and the incentive is not there. So what does DeFi have? Well, DeFi has massive utility, massive incentive. DeFi has been probably one of the greatest flourishings of financial innovation in our lifetimes. I can't think, like, I saw the early days of high frequency trading, low latency. DeFi takes its cake. Probably what you'd see in AI, machine learning, and quantitative is probably the only equivalence I could give. And in DeFi, you could do so many cool things. You can do indexing, leverage looping. You can create all sorts of liquidity pools. But the problem is it's all unregulated. And because it's unregulated and because it's nascent, asset classes historically haven't been the best. Now, am I throwing shade on DeFi? Not at all. But all of us would recognize that holding a DeFi token versus holding a treasury are two very different things. And what we've seen in recent months, it's kind of a new phenomenon, is everyone's starting to think like, hey, what if we take the stable collateral of real world assets, which are not dependent on Bitcoin or not dependent on massive volatility, and bring that into DeFi and inform all sorts of strategies. That's what we've been working on at ERC3643. That's what our community T-Rex DAO is working on. And even at PSG, we've been working on this. And we see really exciting initiatives to actually get real world assets, ERC3643 value, into DeFi. And so now, as a holder of an institutional asset, they're talking about collateral mobility incentive. It's no longer good enough just to have that token on a blockchain. What are we going to do with it to compel them? And the biggest one has been collateral mobility, leverage trading, indexing, strategies, yield, real yield from real assets. So that's really what's going to form your liquidity. That's ultimately going to be, all things equal, compel these institutional investors to come on and say, hey, you know what? Yeah, it's really cool you tokenized treasuries. That's nice. I didn't really have a problem accessing tokenized treasuries. But now if you're giving me either greater bips on my fees, or giving me extended hours, or you're giving me more mobility or more venues, that could be something that's interesting for me, right? So this is something where, again, that we're not talking just about tokenized assets, like which are IOUs. We're talking about real securities that are bridged in, and that's really has yet to hit. And so my view is not only is DeFi here to stay, it's the final frontier to unify our real assets and DeFi fundamentally. And that to me is really exciting. And that's something that will happen in the next few months and will have a massive effect on liquidity. And the regulators are aware of it. They're on top of it. And I think we're going to see some really great outcomes coming out of it.
Very interesting. I did not see that coming, but it's a good outlook. Do you guys think that the politics are going to play a big role in this? I mean, it already is. We're seeing how our our some presidents are engaging in this industry, and for better or worse, I mean, it did bring some interest and some sudden splurge in interest from people that we've been trying to kind of pay closer attention to what's going on. Do you think that the regulation as we see it right now, is it on the right path? Are we moving in the right direction? Is let's say MiCA US, they're completely different. The approach and regulation structures framework are different, but do you think we're on the right path? So are you seeing differences in regulators, or are some are afraid and taking it slowly, or are you seeing that we're moving right?
Well, I mean, if you leave politics out of it, right? I mean, I think one really positive development is the pace, right, of these regulations that are coming out in the US. And I mean, MiCA wasn't fast, but it's out there now, and it's been operating for some time. So I think that's really positive that something is there. Now, just because it's out, doesn't mean it's set in stone. So whatever happens in the end, I think it's out there. The genie has been released from the bottle. It's just a matter of how it evolves over time. Right? I don't think they can put it back in. That being said, different regulators have different risk appetites. I've been dealing with regulators most of my professional career. I mean, Singapore, UK, Switzerland, various, even Hong Kong, and things change all the time. You see evolutions in the approach, the risk appetite, comfort level even. You've seen people go like really trying to push it to kind of retreating, and maybe kind of going back out there. So it really depends. And I mean, we're based out of Bermuda. Our primary kind of operating entity is out of Bermuda, and the regulator there is in my view, one of the rare ones out there, because I think not many people know, but Bermuda is a jurisdiction that's famous for its insurance regulation, right? So it's all about risk management. So their approach to digital asset regulation is very much in that vein. Like, we're happy to discuss, we're happy to kind of see what interesting thing you want to do. How do you satisfy risk management? How do you make us satisfied? You've looked at everything and you can offer this product in a way that is not going to cause problems for your customers and yourselves moving on. So it's a very open, collaborative discussion. If they're not comfortable, they let us know. We iterate. Contrast it with maybe more old, mature jurisdictions. Where existing frameworks are there. They try to they see crypto, they try to put it into a hole, and then they kind of patch it with various regulations. I mean, various regulators have different approaches. I think no one is wrong. Everyone is trying to do the same thing, like protect consumers and make sure that everyone operates on a level playing field in a safe environment. It's just the pace, right, and the approach. For example, Hong Kong is very welcoming, but I mean, like you saw the news, I think last week, right? I think Ant was going to be doing stablecoins, and then out of nowhere, they've just been told, no, you can't do it, right? Out of Hong Kong. But Hong Kong has stablecoin regulation, so there's uncertainty there, and you can't really tell. Same thing with the US. Something might happen, things might change, it might get more permissive, less permissive. Singapore, everywhere else. So I guess that's my view on regulation. It's about finding, I guess, the regulator that fits your market, your target market. If you're going to be operating in the EU, obviously MiCA is a concern. If you're operating in the US, Genius is what you got to be familiar with. I think Middle East is Dubai, ADJM. They're all doing very interesting things. I think they want the first one with DeFi regulations. So that's a very interesting jurisdiction as well. So I mean, regulatory arbitrage is a very bad word, right? But actually, it's interesting to see how different jurisdictions approach the issue, right? Because ultimately, they all are approaching the same outcome and end goal, right? It's just how they go about doing it, and that to me is a very interesting thing to watch and to kind of keep the track on.
Interesting, yeah. I kind of almost feel like I have to plug Hacken here, right? So we are working with a lot of the regulators. We are trying to help them and give our expertise, give our knowledge, and help them out. Gratefully, a lot of them are listening and taking notes, but they respond to they answer to a higher power, I guess, within their own ecosystem. So they have to do it. But I think that out of the fear of what stands behind it, as crypto being a little bit wild westish, they're overly regulating maybe and just kind of releasing it little by little, just not to let the storm come out. What do you guys see as regulation being a perfect example? Like how would you see that being like ideal scenario? Let us dream for a second there.
Well, Igor, I love your comment, your point. I think crypto has long been political, and in the U.S. especially, I think we've seen both sides actually, Democrats and Republicans, embrace different crypto projects for better or worse. In fact, I'll make some breaking news on our little cast here that President Trump has actually just pardoned, per the Wall Street Journal, CZ of Binance. So crypto has long been political. It's become even more political, and you saw that this past week with some of the blockchains and projects at the Fed conference and meeting. And this is something that is more and more reality. I think a lot of us try to think of crypto as apolitical or either too small for politicians to really care, but it's quite the opposite. The president has massive crypto projects, massive tokens. One of the biggest token of the year was the President Trump token that dropped in January. So are we moving in the right direction? Yes, absolutely. We all have to be cognizant that, winds change, and that, we need to remain incredibly neutral. So ERC3643, we're not a political organization whatsoever. And we purposely stick to meeting with regulatory bodies. We tend not to meet with decision makers or political decision makers on purpose, because we feel that it's important to remain incredibly neutral, regardless of who's in power. And we've learned this from interacting with different jurisdictions all over the world. We've seen political changes in Singapore, political changes in HKMA, and as new leaders come and go, their views on crypto policy or regulation also change. Same thing in Latin America we've seen. So it's important for us to remain incredibly neutral, and really just push the idea that, hey, now getting to the second part of your question, what are the perfect laws and regulations? Again, I break it down by your category, and I'm going to be biased and say I think the UAE is actually the exemplar. The UAE has the ADGM, which is a great framework for regulated private assets. They're extremely well versed in this. They've done really great things with their sandbox, and ADGM has been an exemplar. Then you have VARA, which arguably is one of the most progressive virtual assets regulatory authorities in the world. You've had a DIFC and DMCC, and you even had the SFC, the national regulator in UAE. And they've created a comprehensive regulatory framework for whether you're taking commodities like gold, private assets, or even DeFi protocols, and given everyone a part to play. And so I think that as we go forward in the US and in Europe, we're going to see, they're very different market structures. So depending on the regulator, is going to depend on how that market structure is set up, right? But you're going to see, what are your main tenants? You're usually going to see a stablecoin legislation. You're going to see a market structure type legislation. You're probably going to see a virtual asset or DeFi protocol type activity legislation. And then you're really going to have interpretations on existing securities laws with new technologies meeting that. So in my ideal scenario, where we need to have explicit policy rules is key. But Wayne also said something very important, which I want to echo. These are all policies. So this is like froth on top of the soda. Like, these are not hardened yet. And frankly, the reality is, and I'm jumping how people could get involved, there's simply not enough tokenizers on any blockchain to meet the demands that will convince the decision makers in DC and really writ large. They work with entities that move quadrillions in assets, literally quadrillions in assets. And you rock up and saying, hey, I'm a protocol and I've tokenized 2 billion, 5 billion, 10 billion, hell, 100 billion. It's inconsequentially small. When I worked at Bank of New York Mellon, I think one of our favorite statistics is we process 7 trillion in securities every week, right? That's a tremendous amount of securities. So there's just simply not enough of the industry on the DeFi side yet where that demand becomes so big that then become like a dominant force. And to me, that's part of a call to action I'll talk about later.
Yeah. No, I totally agree with a lot of what you said, but I'm a little bit more pessimistic about this. I mean, I've been a lawyer working in the space a very long time, and one thing I realized that it's very hard for governments to give up power, give up control. So I was an IP lawyer once upon a time, right? And when blockchain came out, everyone was like, IP is the perfect kind of thing to put on the blockchain, right? Because you don't have to do searches in like 100 countries. It's all on the blockchain. You do one search, you're done, right? But every country will never give up control over their patent register, right? So you'll never have like a unified blockchain. And crypto, at its core, is meant to kind of transcend borders, right? You can be, as long as you have the internet connection, you can be transacting from anywhere. But I think so for me to imagine a time when the perfect set of regulations would exist, it's quite hard to kind of make that leap. I think the closest that I've seen, and I'm not saying that it's perfect or like even if it's good, right? is, I guess, the EU, because that's the huge market encompassing many nations that kind of agreed on some sort of common standards. Implementation varies depending on jurisdiction, but only fairly minor, right? I mean, on a smaller scale, the states, you have 50 states, so they all agree on a common thing. Then you have a common market, so to speak. But I mean, if you talk about truly a global kind of set of regulations that make sense, it's very difficult. I mean, you will have countries that have good regulations and laws for your use case, but then you're stuck there, right? And I think at ERC3643, you guys are making very good progress in kind of programming that standard, right? That you can kind of make it modular. But what if you are compliant in one, you may not be compliant in another, and then you have to have different. So to me, it's I don't see, at least in the near future or even the midterm, these things happening, right? I mean, it's possible, but that's my view on it anyway.
Well, to kind of like put my 5 cents in, I'm in DMCC right now. That this is where our office is. We are working with ADGM and VARA. I do think they are pretty progressive. They're doing some interesting stuff. There's a lot of stuff that's they're going to be announcing that I think are really going to pave forward. They're really trying to invite projects and entities to come here, and so hence they're creating an infrastructure for them that comforts them, which is what we were talking about earlier, where people and future Amazons and Googles are going elsewhere because they want the stability, they want the clarity, and we're all waiting for that Clarity Act, right? So when's that coming? Hopefully soon. So when you mentioned something about the IPs, each country having their own, and there is, let's say, a centralized one that you have to apply for. It's a global, it's a world, kind of like IP, right? If I'm not mistaken, you're the
Yeah.
attorney here, so don't quote me on it. So isn't this sounding like kind of what we're doing now in terms of like every stable and every RWA is creating their own layer one or layer two or whatever? And then how do we communicate? How do we exchange the information between each other? How far are we from real interoperability? What's the path forward on that?
Well, I mean, I think the closest thing you can get to that right now is what Chainlink and a few other bridges are doing. I mean, they're doing good
These
work, but
guys are
they're really
popping
just
up
kind
in
of.
every other conversation. Chainlink are on fire.
Yeah, they are. They are. I mean, we work quite closely with them because we use their proof of reserves for our assets, and I really admire what they're doing. And but like you said, everyone's kind of building separate um, infrastructure, so to speak. Yeah, different protocols, and it's almost like you're seeing the battle between VCDs and DVDs all over again, right? Or like DVDs and Blu-ray, right? Who's gonna win? Who's gonna be the one? It's interesting to see because you see these cycles come and go. Ultimately, when you talk about cross-chain operability, I take my example from governments, right? When regulators, when something becomes so systematically important, then they mandate that you have to be interoperable, right? You have to be able to interface with various other things. Um, I remember. I mean, I read a little bit about what's happening in the UK. Some of the proposals about about stable coins, right? They have to be integrated into banking rails and these sorts of stuff. I mean, I think it will come to a point where governments can, like you said, they can't ignore it. Crypto can't. It's not going away. It's big enough that everyone's taking notice. They know they have to do something about it. It will come to a point where they say, okay, fine. If you want to operate in this space under this regime, then you have to be interoperable some way somehow, right? And which is the protocol that will win? That's still an open question, right? I mean, if
I don't
even
think
they
it's
will
which
allow a third party.
protocol that will win. I think it's more so having a solution that allows us, bridge is not the best way to do it, at least not the safest. But there has to be something that comes out of this necessity, and nothing like a real problem to drive some creativity. And then to add on top of that, we're going to put a dressing of a little bit of regulatory compliance and requirement, and that's definitely going to drive something somewhere in the right direction. I hope so. I hope so.
No, I mean, like in Asia at least. I mean, MAS. I'm sure Dennis, they're rolling out all this interoperability within like ASEAN or like the certain Asian countries. So I guess if you talk about practical reality and the most potential is you have these blocks forming, and then eventually these blocks have to talk to each other, right? So instead of dealing with like 100 different protocols or whatnot, you have like maybe 6 or 7 big ones, with various members, and then they start building the rails between them, right? It's a lot easier to align that than like 100, 200 different kind of roads, so to speak.
Dennis, your thoughts on that?
I completely agree. And that's been a strategy for us at ERC3643 for quite a while. Chainlink has been a fabulous partner for us with their CCIP offering, as well as their ACE and CRE. And there's a reason why they are involved. And Sergey and the team around him are on the ball. But we also has some really great solutions as well in the association. Polygon has an ag layer solution as well. There's some wormhole layer 0 solutions. So from our perspective, we've seen a lot of great leadership for Chainlink, but we don't ultimately know ourselves what's going to be the winner, but we're seeing a lot of progress there for sure. A challenge for us has been implementation. So earlier this year, we actually embarked on multiple implementations of 3643 in different blockchains. Some I can talk about, some I can't, but the ones I can, I know they're coming out on Stellar. We've done one on Aptos Movement as well. There's another one coming out on another major non-EVM, wink, wink, that's also coming out. So, and of course, the Ethereum Foundation has been super transformative. Organizations like Etherealize and the EEA have been really helpful for ERC3643, and we've been fully embraced by the new teams at the Ethereum Foundation under Tomas to really help us think through mainnet versus L2s and these different projects like Linea and even Besu. Even Consensus has been extremely helpful for us. So we're really excited by what we're seeing in terms of embracement. And for a long time, 3643, we're kind of on our own. We didn't really know how to navigate these different things. And so these partners like Ethereum and Chainlink and others have been really, really transformative for us. And we've been really helping their teams think and our teams think together about what this ecosystem is going to look like in a few years. What's it going to look like with Ethereum and its different L2s, and what are the different, let's call it, incentives that each L2 can provide, and how do we deal with private bank chains and non-EVM chains and all this sort of stuff. So I think Chainlink has been leading the way on this conversation. And I think for us at 3643, we've been trying to diversify our implementation, but it's still very hard to think through everything. And there's a lot to go through, as Wayne said.
Very interesting. Very interesting. A lot to think about. But we are kind of going into a new way of things, and we have to figure out as we go along, and hopefully the regulators kind of guardrail us along the way. Now, another question is, what does compliant secondary liquidity look like in practice, and how do transfer rules coexist with market makers or AMMs?
Wow, what a question, Igor.
Which one you guys want to grab that one?
God, all right, everyone, open up your textbook to page 752. Let's go through that.
Literally, I had to read it to make sure I got it. Like I got it out right. It was a mouthful.
Wow. Okay, so let me see if I can understand this question. Igor, you're asking about what, compliance and secondary liquidity?
Yeah, kind of, and like the market makers' involvement in all this. What do you think?
I mean, I'll speak for 3643, but we don't really have too many projects with market makers involved, because our bigger issue is that we don't have enough liquidity to market make, right? This is sort of our problem, right? Is since there's just structurally not enough. this is why like a lot of our regulated dexes have absolutely failed, right? Like there's been so many great tries with Fireblocks and Aave Arc and Uniswap, and put 2 3 6 4 3s in a pool. It's a disaster. It's a disaster because first of all, the complexity and gas cost is so high. Second of all, those type of transactions require so much complexity on either side. The infrastructure simply not mature enough to support that sort of things. Let's say you have 3643 that represented a private equity asset, like a fund, and then you have another 3643 that represented a yield-bearing stablecoin, right? A non-Genius Act stablecoin or whatever. The complexities on either side are not yet able to be imputed into the token. So things like Chainlink ACE and help that happen. But they can't help it at a scale or size that's really appreciable yet. So secondary liquidity, I think, is a head fake for permission tokens. I just simply don't think that the structure and the complexity support that kind of like, let's rapidly, have a DEX process everything. The blockchain trilemma, there's other gas constraints that simply make it difficult for today. A lot of people working on it in the future. That's why, per my earlier answer, I think going into DeFi, where you don't have to deal with those heavier constraints, and you're basically taking the value of the asset and putting into a different contractual relationship where it's permissionless, is much better. Simply just compliance and liquidity are almost an oxymoron. A compliant liquidity, secondary liquidity, is an oxymoronic statement from 363's point of view.
Isn't that where kind of what we've been talking about all along, the institutional guys? Do you feel like they're going to drive the liquidity, or is that just like a wishful thinking?
Well, I mean,
please.
No, sorry, Dennis, you go ahead.
Well, certainly. I mean, this has been a big discussion. Is you could have compliant secondary liquidity in an app chain, in a bank chain, where everyone's pre-KYC'd and all that, and then you don't need to do all those checks internally there. But people don't really want just bank chains. They want open infrastructure as well. So the answer to your question, Igor, is different depending on that context, depending on an L2, L1, or permission chain. The first place we would see it, to your point, is going to be on those bank chains. First and foremost, where that compliance infrastructure is already integrated, already set up. There's been a lot of pre-work done where you don't have to do these heavy compliance turnovers. And then you're going to see that liquidity really come in, and you've seen a lot of cases with Connexus, with Canton, and these other things. Supporting massive multi-trillion-dollar repo operations that you're definitely going to see. But they're not doing heavy compliance into the token. In those cases, the token is just a unit of account just being transacted. With 3643, we try to move that middle back office compliance on chain and have it done atomically within the transaction. So that means when you want to do that transaction, then we do the rule set, then we do the compliance. That is very gas intensive, resource intensive, and that's where a lot of our innovation in our community is happening right now, if that makes sense.
Wayne, I think you wanted to say something.
Oh no, I mean, Dennis took the words right out of my mouth. You'll see these walled gardens kind of spring up where, I mean, what are transfer rules, right? They are basically restrictions on suitability, legibility. So within that bank chain walled garden or like network of services, freely transferable secondary liquidity if there's enough people. I mean, if you look at what Facebook tried to do with Libra, I mean, there's a lot of services, a lot of like activity going on Facebook, Marketplace. I mean, that would have been, I think, an example, but obviously there was a lot of worry on the political side of that, so we won't go into that. But yeah, when you say truly compliant secondary market liquidity, I think the whole point is that they go to the secondary market so that they don't have to deal with a lot of the friction that transfer rules put into place on primary issuance and transfers. Yeah. I mean, you put it this way: if you have a walled garden and you want to interact with DeFi, but DeFi can't exist in the walled garden because it's not DeFi anymore, then you have to work with, I guess, an OTC. That's right. When you deal with the OTC deals with DeFi. So that is it's almost like you're taking exactly what's happening now in traditional kind of setups and just like slapping on the blockchain and doing it like that. So I think it's a hard question to answer because based on what I see, it doesn't really make sense Exactly like what Dennis has mentioned.
Okay. All right. No, I get it. I get it. It was like poking a bear there, like trying to figure out what's gonna happen. We have to give it a try. So I guess for you gentlemen know about this, but for some of the people that might be listening and just kind of tuning in from elsewhere, we are doing a trust summit November 3rd, where all of us will be talking about some of these interesting topics and way more. So this is a first for Hacken. We have never done this before, but we decided to do it now, create a summit where we bring together people talking about all the things that matter, all the things that are concerning the industry, all the things where the industry is going to turn and how we're going to do it. So this is with our cybersecurity background, of course, the main emphasis in how to securing the industry, how to making sure that tokenization and RWAs as a whole become not an abused another asset class, but you know, preserve. You guys mentioned proof reserves and other, you know, implementing security standards, and that's what we're going to discuss there. I'm not going to go into too much detail, not to spoil the follow-ups, and for people to stay in tune. But we do want to create a platform where people can get together, discuss things that are going to happen, how we're going to all do it, and so by doing so, we are bringing regulators, institutional, government entities, and of course us semi DeFi guys that kind of started off from way before, have the tech, understand how to implement it, and explain to the institutional guys that it's not as scary. We have the solutions, and we're gonna show them how to implement, hopefully, without any pain points, right? In a nutshell, that's what it is. Um, do you guys have any other questions or not questions, but anything that you guys wanted to relate to the listeners? The idea was to have everybody walk away with three major points and kind of like that is important in your view.
Wayne, please.
Yeah, you go.
You want me to go, or
You go first. Yeah. It's just on my screen,
Well,
you're on top, and so that's why I'm like going like literally like left to
I'm
right.
so excited what Wayne's gonna plug. I can't wait. Open Eden's a great project. So we got some cool stuff going on. So three things for your listeners to take away. Open standards is going to be a big concept. I give a lot of credit to the Linux Foundation, Decentralized Trust for making me aware of this terminology. Open standards of all kind. ERC3643 is not on my OPEX standard. Us being adopted should not come at the cost of others not being adopted. And we're at such a maturity point of view. We've literally circumnavigated the globe, done almost every major asset class. You know, we're involved in all the biggest conversations, and we view ourselves now as a pathfinder for other standards to come in and really kind of guide. So open standards, standards first is so fundamental that everyone needs to really think about standards. And why is that? Because let's say you want to do a thing we talked about just now, you know, institutional liquidity or compliant liquidity. You can get 12 great engineers to come up with 12 unique solutions, all which meet your requirements. But here's the paradox: which one do you choose? You know, do 13, 14. So having the industry kind of as a maturity point think, hey, come together and let's build these kind of joint solutions, I think is really key around these kind of open standards, because adoption is very difficult, and having a community around open standards is fundamental. Second thing is ERC3643 is what we call the suit and tie organization. So if you're a large DeFi protocol or blockchain or whatever, you probably know us by now. But if you haven't, please come and join us, join our mission. But if you are DeFi degen, if you love to engineer, if you're just curious, if you're an individual and you're like, yo, I'm not one of these big organizations, you know, I'm a small organization or individual, I highly suggest we've created a brand new organization called T-Rex DAO. So it's t-rex.network. And we've built it as a way for everyone in the community who's not a big suit and tie person to come in, come learn about ERC3643, the T-Rex standard as we call it, his nickname. Come develop it. Joe Kem, who is the inventor of 3643, is helming it. And we're hoping to capture everyone's interest organically. We've built a huge Discord for everyone to get involved. And then the third thing I'll say is huge movements behind the scenes. From my perspective, we're living in a golden age really right now. I know we don't think about it when we're in it, but from where we were last year to where we are this year, and things that are extremely exciting, things I could semi-talk about publicly, like the DTC NASDAQ announcements, are really, really huge. And so there's tremendous movements behind the scenes, and I think we're all going to be really excited to see what happens in the next 6 to 9 months there. So super excited to see you at the Trust Summit. Igor, I'm happy to speak with a fantastic panel, and I'm looking forward to see everyone, including my good friend Wayne.
I'll try to make it down there. But yeah, if we go back to what I guess I want people to take away from this kind of conversation we've had, I think taking a step back is more along the lines of, okay, what is tokenization? It's not an experiment anymore, right? When I started practice, I worked on a tokenization project in a law firm that really was just a glorified spreadsheet, right? So it's not an experiment anymore. It's developed to a point where these things are actually becoming financial infrastructure. And we at Open Eden here, I mean, we have our products, we have our services, and we build all these products to bring real world assets and use cases on chain. And there's rather than try and build a better mousetrap, right? We're always on the lookout, and we're always open to kind of looking at what is the best way forward, right? It doesn't have to be how we do it, but it's how we push the message of tokenization further along the line, how we guide the narrative, how we shape the entire ecosystem. So I think takeaway here is that don't try not to end up in those the very tribal mindset, my way or the highway. Like, be open. There's many projects, very good projects all over the world in every jurisdiction trying to do what we are doing here. So I think linking back to what Dennis has said, right? We don't have enough of them in like the critical mass. So if everyone in tokenization kind of gets on the same page, it forces wherever they are, whatever regulators looking at them, to also kind of adapt to that situation, to bring us closer to that perfect world thing we were talking about that that seems so far away right now. So I guess that's from my perspective what I want to see, what takeaway I want people to take away from this conversation today.
Very nice. All right, and so as I promised, we're going to wrap up, but I have to ask. This was a semi-serious conversation, talking about a lot of different important things. But I'm going to ask something. If we're going to dream and imagine, so each one of you, all of a sudden, has an option to be an advisor for a tier 1 entity. We'll call institutional, that is moving into the tokenization sphere. Who would you choose, and what would be the first 3 things you would advise them on?
Who would I choose? I don't know if I can choose anybody, but let's say it's a tier 1. They have the funding, they have the tech, and they just want to know how to do it, right? I think the key thing is you start with structure, not the technology. Everyone, I mean, I've worked with startups when I was in practice, and
But who would it be? Who would it be?
Yeah, I can't.
Come on, you gotta. This is no obligations. This is we're dreaming here. Who would it be?
For someone who actually, I do advise tier 1 organizations. This one I can't answer. I literally do this, and I literally can't answer. So my answer is I can't answer this question for a spicy one. But let's say hypothetic. who would I want to advise? And obviously, I'm extremely grateful and blessed to have some really great friends who have come into some really amazing institutions. You know, DTCC, BNY Mellon, Bank of New York Mellon, Bank of America. I look on those times very fondly. I don't need to advise them on anything. I think the real answer is a lot of these teams now are super mature inside. They know exactly what they need to do. They know how to play regulation. They know how to play tokenization. They know how to navigate the different networks, and they know, you know, that mobility and cloud mobility is key. You know, it's really helping them kind of connect the dots, connect insights, and just be supportive. When I was at Bank of America, there was no digital asset. You know, we just did it was Ripple and R3. When I was at Boney, it was a few projects, but there was no digital asset team. Nowadays, most institutions have a dedicated digital asset unit. Fidelity, JP Morgan have massive digital asset teams. So they know what to do. They're great. People like me and Wayne can help them along. And I would say the inverse. I would say, you know, for me, I left that world to build something that I could not build within that institution. With PSG, we'll be announcing a really exciting major project coming up in the next few weeks. And so build the things that you think they need. They are smart, these institutions, but they're limited from their capacity. So, you know, go out and be intrepid, be entrepreneurial, go out and build these things. There's just simply not enough excellent projects out there. We need more. And when you build it, really smart people in these institutions will notice it and help you ultimately. So that's my politically correct answer to your question, Igor.
This was completely random, and so I'm like, let's give it a try. Okay, I'll accept it. I'll accept it both. Okay. On this note, thank you, gentlemen. I appreciate your time. I know how busy you guys are, and I do really value the. You know, we went a little bit over time. I was thinking we're gonna cut it short. Remember, I was saying that if we end up running out of topics to talk about, then we'll cut it short. But we ended up going over. So thank you very much. This was very interesting. Very important for us to discuss and to see where this industry is going and how we're going to help it get there. Any last words? If not, then blink and let's go home.
All right. Good night,
All right, guys.
everybody.
Thanks so
Have a
much.
good night. Have a good day. Bye, guys.
Bye.
Bye.